go, here we go, here we go, here we go. It's markets in the morning. Let's go. Hey, what's going on, everybody? This is the blockchain backer bringing you the latest cryptocurrency news and analysis. Welcome to Markets in the Morning, where we take a look at the price action of the cryptocurrency market, the stock market, the altcoin market, Bitcoin, XRP, metals, all that good stuff. As we get ready for the United States stock market to open right now, coming off of a crazy day yesterday with the Dow being up over 200 points and the NASDAQ being up over 300 points yesterday. And of course, Bitcoin's quick shift up that happened there from $26,000 to $28,000 yesterday. So a pretty wild day over there in the markets yesterday. We kind of caught the start of that right as we were wrapping up Markets in the Morning. We were seeing Bitcoin start to break out there yesterday. Or at least leave the 2-week range that it's been stuck in. I don't know if you'd call it a breakout, but definitely left the little 2-week spot that it's been stuck in there at $26,000 for about 2 weeks now. Getting as high as 28 currently as we start the day off. We're sitting at 27,428. So we'll do what we typically do in here. We'll run through what the markets are looking like this morning so far. Even those things can definitely drastically change throughout the day, as we all witnessed yesterday. And then we'll run through any type of news. So, Pat, I see you coming through, man. I see that, brother. I don't know if that showed up on your end, but I do see that. Looking over here at the Dow. So the Dow is going to be opening. It looks like we're going to be opening up positive in the stock market. Let's go ahead and run through this. Follow me over here on Twitter at BCBacker. That's my social media page. It's the only one that I do use. I do not DM you. I do not ask you to send me your crypto. So make sure you're following them with the blue check mark, not over there on Instagram, Telegram, Facebook, any of those places. This is the only place, Twitter or x.com. Of course, you guys can check out bcbacker.com as well. Where over 40 videos and 11 hours of content that was made by me this year, published over here, teaching you about charts, indicators, trading view, all that good stuff. So, all right, Bitcoin sitting at $27,413. Dow Jones opening to the upside again. We are on a nice little streak here for the Dow. Let's see how many days in a row are we on. This is day number 4 of being in the green here for the Dow as the recovery has been coming in. This is such a fantastic sign to see for sure. Dow up 59 points to start the morning. NASDAQ up 22, S&P up 8. So we're up about 0.15% really for all of the indexes. The leader this morning is NVIDIA. That might be a new all-time high. I don't know. Coinbase down 1.69% this morning. XRP still sits there at 53 cents, but starting to really chug along, starting to see some familiar structures starting to show up in here as we've been waiting for an accumulation schematic to appear. Still has a little ways to go in this thing, but some familiar areas are starting to show up. We'll see if we start getting a little bit more of a shift up and then move into a last point of support or into a spring phase, as if we're sitting right in here getting ready for that to start playing itself out. We'll give it some more time, but things have been holding themselves together. I know a lot of people worried that this thing was going to do what happened with the SEC crash. Give you a little perspective on timing of the SEC crash that happened 5 days, right? You had this thing, and then 5 days later, boom, you went down and you hit like 17 cents. This thing has now been hovering in here for, if I can do paper napkin math, 12 days. So holding together okay. Dow Jones Industrial Average, again, stock market, we're seeing it shift up. This is definitely a sight for sore eyes to see this happening, coming off of the insanity that we felt the last couple of weeks as this thing shifted down, and we felt crypto go with it right there at the end during this kind of capitulation moment that happened right in here. And then all the shorts closed. You know, we talk about crashing structures, right? 1, 2, 3, 4, 1, 2, 3, 4, 5, 6, 7. And then boom, now it's starting to reverse. So we watched all that, got to see a crashing structure play out live. And sure enough, it's recovered, just like we had followed over here with silver. That silver had done the same thing. And that silver has just kind of been the exact same, but leading the way a little bit. We're going to relay that again one more time. The yellow is the Dow Jones Industrial Average, but you can see silver's been kind of a week ahead. topping and then doing the same thing, but breaking down a week before the Dow, then recovering a week before the Dow. So nice to see silver getting all the way back up to the heights again, if this is going to be any type of influence on there. It's bizarre. It's bizarre for sure. So I'm not going to lean on it too heavy, but it has been interesting to see it kind of leading the way, and then the Dow just following and mirroring it right behind it. But you can see now silver pushing on $25 per ounce as the Dow Jones is moving up today. Bigger move over there, DXY. DXY taking a total poop on itself. Pat, everything's coming through, brother. I see it, man. Thank you so much. I'll get to those soon. But you can see we're starting to get a pretty decent fall coming out of here on the US dollar currency index. Still, I don't know if I technically count this as a lower low yet until you can at least take out that 103, but man, it is close. So maybe we'll catch that here in the live stream. Hopefully so. Moving back to Bitcoin, still 27.4. Dow up day again. Let's go. Let's go. So this is kind of my grand thesis. I know we talk about it all the time, but this was something I definitely wanted to see for my thesis to remain intact. So good to see that happening in there. And now we got the Dow Jones futures knocking on 35,000. So this is great. One thing that's also interesting is we have been seeing that gold has been shifting back up at the same time. So we've got a pretty interesting phenomenon happening here of gold moving up and the stock market moving up at the exact same time. Good to see that. So, well, we'll see if one of them breaks out. But either way, I don't know if there's too much insight there just yet when we're looking at gold versus the stock market just yet. But of course, today it's a green day. It's always a pleasure when it's a green day on a Wednesday because that puts us halfway through the week and I don't feel like such a jerk. And we can actually celebrate. Let's go.
It is Wednesday, my dude. It is Wednesday, my dude.
Let's go. Happy Wednesday, everybody. So we like to have a little bit of fun here on Wednesdays. We're halfway through the week, man. And, not too shabby when we got a bit of green out there in the markets. You can see the NASDAQ has flipped over, but the Dow is still continuing to go, having a green day for itself today. Looks like Bitcoin, slight pullback, 27.3, XRP, 52.9, gold, 19.45, silver, again, knocking on that $25 door. Pretty wild to see that. One of the things, let's hit a refresh and see if we got any updated here on the overnight repurchase agreements. You guys know we've been looking at this for the last week or two. It's something I've been talking about in my newsletter for quite a while, looking for $2 trillion to break, which it did. And then we saw all the indexes go break through all the retracement levels as that did break down. It paused there in mid-July. All markets pulled back there. Then finally we started seeing that pull down start to come back down and money flowing out of the reverse repo market. And then, of course, we end up seeing the stock market start to rally the second that money starts flowing out of the reverse repo market. So all good happening in there. I will get that update later for the reverse repo market later today. I'm not sure what time that actually does update. We've been getting some economic data out there today. The only miss today was the Q2 GDP expectations of a 2.4% GDP came in at 2.1%. Non-farm payrolls came in lower. So non-farm payrolls coming in lower means the employment market is tightening up. Employment market tightening up means what? It means everybody expects it's less likely that the Fed will raise rates. The next Federal Reserve meeting or Fed rate meeting is scheduled for September 20th. The market now prices it at 90.5% probability that they will not raise rates at that meeting. They're not going to be raising rates at that meeting. What does that mean? Less likely that there's optimism to stay over here in the reverse repo market. So money flows out. What happens when money flows out? It flows in. So a weird dynamic for it all to take place at some point, though, there likely becomes a breaking point where it's like, okay, great, people are losing their jobs. That's good. When does it actually become bad? I don't know if we're anywhere near there yet, but just to kind of remember that dynamic that eventually losing jobs is a bad thing. As of right now, for the labor market tightening up, it's considered a good thing because the Fed is less likely to keep rates higher, loosen credit conditions, and all that good stuff. So, all right. Bitcoin, if you caught my video yesterday, spent a lot of time talking about, recovery structures happening in here. Let's see, was it this one? Which one do I get to? It wasn't this one. I've lost it. Tis life. If you guys caught it yesterday, we were talking about 2017 or 2018, 2019 recoveries, talking about 2015 recoveries, super cycles. If you haven't watched that video yet, and if you're one of the people running around thinking we're going to 12K, I highly advise you go watch yesterday's video just to give yourself a little bit of knowledge of the history of Bitcoin's price, how bizarre it would be if we did go to 12K, and how if we do go to 12K, watch out. That is not bullish. That is not a bullish floor. That is Doomtown. I don't even think there's even an inch of support there at 12K. We would just go right on through it like butter. So go watch yesterday's video and take a look at all that good stuff to show how we're very similar to 2015. And what would be real interesting about this too is like, say we do end up getting, something like this in the stock market. We talk about how like altcoin seasons and run-ups in the market, they can always last so quickly. And just that's really even what we've seen here so far in 2023. Every move up has just been a matter of a couple of days. But even if we did get something, to come along and do a quick move, this would just only be 21 days. 21 days, look where you get back to like the 702 Fibonacci retracement. So just to kind of keep in mind, that's usually how this market acts. It would be very quick. But it doesn't mean we can't just sit here for a couple of months torturing people until that day does actually come. But so far, the behavior you have here, like I said in that video, I said you have the people who are the 4-year cycle people, the people who are the block reward having people, adopting this argument is the best argument you could have against the stock market. Like I would still say, yeah, but the stock market, and you say, well, BCB, look at this. Look at the timing of all of this. Look at the price behavior of all of this. Look at the support levels holding on all of this. I don't see anything different happening here than has happened in the past. And the only argument I would be able to come back with my stock market argument is to say, well, we'll see what happens when the time comes. We're going to repeat 2018 through 2020, we're going to 12K stuff, those arguments are based on nothing. That's just Doomtown. That's dead Bitcoin. But if you adopted this argument, this is the strongest one to combat my arguments. So if you watch yesterday's video, they'll kind of give you a better idea on the price history of Bitcoin and where we currently are sitting at right now. All right. Back to markets. Now that markets are getting moving, we could see that the Dow is still up 84 points now, up 0.25%. A good day for the stock market, coming off of a 270-point rise yesterday for the Dow. Over 300 points for the NASDAQ yesterday. Absolutely insane. It looks like silver is taking a little bit of a chill pill right now after hitting $25 this morning. The DXY is the one that's really kind of taken a hit this morning. So, all right, there you go. That's a pretty good wrap up. Crypto, obviously, not a whole lot going on in crypto after yesterday's epic rise that happened, the quick little pop that happened super fast and then stalled out quickly. Of course, a news-based event in which the market, call it what you want, timed news, whatever. I know Blockchain Trucker said magical unicorn fairy dust. As you guys know, at the very beginning of yesterday's live stream, we were sitting there studying this price behavior versus, let's see if we can get there. What happened after our last liquidation event and how essentially the exact same thing had happened here, right? The big liquidation stalling the new low, big liquidation stalling the new low, revisits back up, and then stalls all over again. And then we're looking at this saying, hey, we're kind of there. And then the time news kind of comes out yesterday morning to get a little bit of a breakout there. But keep in mind, if this stuff is true, we could still be in here for a little while for Bitcoin. But all the eyes are over here on this guy to see if we can bring the euphoria back into the market. Yesterday I was spending a little bit of time going through like Google Trends. I don't know if you guys ever do that, but in here, this was it was the most Googled that we were going into a recession. More people believe we were going into a recession here than any time throughout history, more than even during C19 when we had 25% unemployment. More people were double the amount of people are searching for recession in here, thinking the sky is gonna fall into the ground. So like I've been looking for things of other stuff, like who's searching for Great Depression, but Great Depression is an interesting one to search for because it has very cyclical annual searching. It seems like during the spring is where it gets searched the most. So my guess is that like in grade school, probably, that's the only logic I can make of it, why it's so cyclical. Grade school must be the time of year in the spring when where certain grade levels were all being taught about the Great Depression, I guess, in that time. And it gets Googled very often at that specific time of the year. But during C19, it obviously spiked. And then during the run up of all the craziness with the laser eyes and the diamond hands, absolutely nobody was searching for Great Depression. So like I look at those things. I'm like, all right, well, are people like still scared? And then I'd look up other stuff. Like I'll look up like, what is the Google Trends of what stocks, like quote, what stocks to buy, or should I invest in 2023, to see if people are searching that too. And it still just seems quiet out there. And I think, we're coming off of a moment where everybody was really scared that a recession was happening, but we still don't have any kind of euphoria in there. If you compare what people were searching for in 2021 and right now, we're still not there yet. So I don't know if there's really a lot of wrong footing. And that's one thing we talk about a lot, is that retail is usually going to get caught on the wrong side of everything. So we'll keep an eye on that. I don't know why I even decided to bring that up today, but it was something that I was looking up that, the searching for recession has certainly tamed down. It's coming off of super big peaks and totally calmed down. But also at the same time, we're not seeing people search heavily on what to invest in, or should I buy, or how to buy, or, what will stocks do in 2023, or bull market. None of that stuff is getting searched right now either. So I think everybody's still in that, and I can relate to that. Still in that unknown moment right now. If we end up seeing big spikes happen in that, where recession just crashes, search terms for recession crash down to absolute lows, and everybody's capitulated on the idea of recession. And then if we start seeing like search terms of, what to buy, should I buy GameStop? All that kind of stuff. If all of that returns up in here, it'll be something we point to at the time. I just wanted to kind of give a little report that I looked at it. And the market is still very mixed. So there's no real group that seems to be offsides at this point. And it's typically, we see those big moves happen when someone is offsides. And I think the thing that would get people offsides would be that. The most searched recession in history, to then go into new all-time highs, would likely capitulate the idea of a recession for most people. So, okay, stock market looks like we're still moving up here on the Dow. We're up 132. Dow futures crushing it. Absolutely amazing. Dollar still trying to break down. This is interesting to see such a sharp move in the dollar. I'm not convinced of it yet, but I'll take whatever we can get, right? Dow trying to knock on 35,000 right now. It's at 34,995. Coinbase had a nice little pop yesterday off of a support level. Kind of the timing of that was perfect. One thing I had correlated with Coinbase has been how much Bitcoin and crypto, of course it makes perfect sense, right? Bitcoin and crypto and the Coinbase chart all kind of go hand in hand in here. But this will be something to keep our eyes on too, to see if this reaches back up into a resistance level right in here at about 200 at the same time as if Bitcoin ends up getting a breakout too, and to keep our eyes on those things happening at the same time. But okay, that's where we're at. You've got Bitcoin still kind of holding that 27.3, 27.4 after yesterday's move on Grayscale. What ended up happening, right? The SEC said, the U.S. courts said the SEC's denial was like, I don't know what the term means, capricious or something, like pretty much like in bad faith, something along those lines, that they're big giant POSs and you're just denying for the sake of denying. And so, everybody celebrated that this means an ETF is coming. It does not. It just means that the SEC has 45 more days to be able to come back and say, here's a different reason, or we'll approve it, or approve something else. But it does not mean the ETF is approved. It just means that their justification for denying it has been overturned. So now they have to come back with something else. So again, like I've said, this ETF carrot is going to be dangled for forever. And my thoughts are, whenever the ETF does happen, if it ever happens, if you go throughout all of history of Bitcoin, every time a major product gets introduced into the market, I even saw TXMC bring this up on Twitter yesterday. We've talked about this on Twitter a lot. Whenever those products get introduced to the market, that's usually a reversal in the market. Overwhelming euphoria or overwhelming fear, right? We've seen Bitcoin futures get offered, and when they do, that's marked the peaks of markets. We've seen Bitcoin short ETFs get introduced to the market. When it did, it marked the bottom of the market, right? Everybody is so bearish, they bring out a short ETF. Everybody buys a short ETF, and it goes the opposite way. So if we ever do get a Bitcoin ETF, if there's like time on it and they're like, it gets released in 1 week, it'd be like, okay, cool. Well, maybe it'll run up for that week, but when we get to that day, I'm out. Peace. Yeah. All right. 35,000 now for the Dow Jones, up 150 points, just absolutely crushing it. Just what we were hoping for. Still, the series of higher lows are in place. Opportunity for a euphoric moment in the market is still viable to happen in here. Coming off of our futures closings, still technically holding in here, but really the most important thing is that those series of higher lows to have happened in there. So we'll take that with the Dow for sure. It's the main thing at this point. Again, XRP meandering along, looking just fine, looking for some more clear stuff to come in here. My thoughts are, uncertain if we're still just kind of working out the first initial phase of accumulation happening in here, or if we're much deeper into it. The phase I am going to expect is some type of spring. Like, this is a range. There would be some type of spring, some type of aggression that would happen in here. Uncertain if we're near that deep to get to something like that to occur. If it showed up, then you'd see me start to get pretty excited here in the market that we're now kind of finishing this up. But I just don't think we're there yet. But we're obviously progressing along. All right, very good. Gold still ripping. 1947, so in pretty decent recovery there. There you go. DXY breaks below 103. Wow. What a move happening for the US dollar currency index. Oh, Coinbase has now flipped back up. Are you green now? You're dancing with green. Apple is up this morning. Caterpillar and Roblox. Losers today, Tesla, but Tesla's coming off of, I think, a 6 or 7% gain yesterday. So good deal over there. As for crypto, all just kind of struggling off of yesterday's big gains. So I think even at Bitcoin Cash up like 19% yesterday. A lot of 7s, a lot of 6s, a lot of 5s and 4s today, just kind of settling after the big day that happened yesterday. So, all right, overnight repurchase agreements, still waiting to see what this will do. My suspicion is this thing is just still continuing to move down, and I think we're seeing evidence of that with the stock market continuing to rise. So it doesn't look like we're going to have this one updated before we finish the stream today. But the thing is that the market does anticipate that the Fed will be pausing at their next interest rate hike meeting, which is on September 20th. It's a 90% chance that they're not going to raise rates. That, of course, gets money to start flooding out of the reverse repo market and back into like the treasury market. Yeah, there you go. That is doing it. Otherwise, as for news, I didn't see anything too crazy. I've already gone through all the news. The real thing was just economic data that came out today. I can just kind of rattle off some economic data for us. The things that were of interest were, we'll get there, hold on. So core PCE came in at 3.7 versus 3.8, which is fine. So like inflation figures and PCE prices, 2.5 versus 2.6, still good. Didn't show any outlandish inflation figures for prices that are paid. GDP is the one that was the slight miss. So GDP came in slightly less than expectations. Really, all the indexes really kind of 2.4, 2.2, 2.3 were the expectations, but they came in at 2.1, 2.0, 2.2. So slight misses happening in there. Still above 2% on everything for GDP. So like what is a recession, right? Negative GDP growth for 2 months, or excuse me, 2 quarters in a row. We're not flashing anything like that happening, but it was a slight miss. Doesn't seem like the market cares too much. ADP non-farm employment change was 177,000 versus expectations of 195. And last month, which was 312. So a slight slowdown in employment, lowest reading that we've had since April. But that's also what the Fed is kind of looking for. They're looking for things to kind of chill out a little bit. So that, of course, leads to excitement for this, leads to the rollout of that, which leads to the move up of that. Wacky, wild, inflatable tube man weirdness. But that's our market that we're playing with right now. So, okay. There you go. That's it. Let me go ahead and hop here into the chat. Pat, let me see if your things show up in my stuff. When you do those big bombs like that, bro, they they don't show up in my thing, but I watched you drop multiple 20s, man. Thank you very much, Pat. I appreciate it, brother. I hope you've got it figured out, man. Hopefully those were like leftovers from the past that didn't like go through, and you were able to get them to go through. Andy Philpott drops a $5 as well, man. Thank you so much. Appreciate it, Andy. Oscar Hernandez coming in with super sticker. Says fist bump, right? So, all right, I got it. We're kind of stalled here for the day, but man, guys, if you aren't looking over here at the stock market and excited, I can tell you I am. Last week when we were watching this, I was definitely biting my fingernails. I was sitting there chatting with TXMC. We were sitting there staring at this thing together, watching it on the 1-minute chart, saying, you know, we're kind of at this point now. You do the crashing structure in here, which we watched all throughout here. And we're like, all right, you've done the crashing structure. You get the new low, and it's like, okay, it's one more. And then talking and being like, so should we see it by the end of the day? And I'm like, I actually think we should be seeing it within an hour for it to come back, because this is what you always see. You see the break below and then one more new low come in here. And then boom, off and away it goes. I'm breathing a big sigh of relief over here with the stock market and feeling renewed energy that things are looking right all right. The day that we will get like real nervous on this channel about the Dow is the second we start like setting new daily lows. Like you just go through these things and you just kind of see it that we continue doing these, and the second those daily lows come in, it is where it always falls apart. So we just kind of start even in here, like going in here, heading back up. The lows are good until finally, boom, that first daily low comes in, right? Higher high, daily low. That's when things fall apart. Then you move over here to before C19. What do you have? You have the higher lows. The second that you take out that low, boom, everything falls apart. And the story is true over here in the great financial crisis as well. Right? The second we go taking it out, right? Higher lows. The second we take it out, right? What do? We still hang out here for 6 months, but the mark was there with the daily low happening to head into the great financial crisis. But as you could see, it still just continued to roll up, get parabolic, right? That's what we have in here. That's what we have in here. And up until now, that's what we still have in here. So nothing to go too crazy on, but a pretty clear rule I think we can see there, that if that day does come, which it likely will, that would be a big fat warning sign of everything that has happened over the last 15 years, that each time that occurs, it has led into super bad times. But as of now, all gravy. Here we go. So we'll take it. Oscar, thank you for the super sticker. XSupercraSY, member for 3 months. Thank you so much. Eric Martinson, gifted 5, brother. Thank you very much. And Oscar also gifted 5. Thank you. And then Eric gifted 5. My gosh, you guys. And Gator. Gator 5. Thanks, guys. It sounds like it's working for everybody today. I was talking to Paz, talking to Eric. Even Gator, I was hearing Gator, you were having a problem. So I'm glad to see it's working. Thank you guys for your patience. It's something, whatever's going on over there at YouTube, unfortunately. But thank you guys very much. I appreciate it. Zoltan Vakuya. Likes are not securities. That's right. We have 1,700 people in here. If you could hit the like button. Market is rocking. I think, here we go. I'll give you the frog. The frog should get me 200 likes, or it'll cause me to lose 200 viewers. Let's find out what happens.
It is Wednesday, my dude. It is Wednesday.
Let's see what happened there. It'll be like a mix of both. We kept the viewers somehow and 100 likes. Thanks, guys. I appreciate it. Likes are not securities. Thank you, Zoltan. I agree with that. It's the number one way to support the channel. Eric, again, with 5 more, brother. Thank you very much. Andy Philpott with 5. Man, you guys are going nuts. And Pat, another 5. Guys, I'm very appreciative of that. And so is everybody in the chat who's getting those. If your name is flipped green, you just got hooked up by viewers of the channel, supporters of the channel, members of like the 702 crew, really hooking it up, giving you opportunities. We do every month, we do like a members only live stream, and you got all the little emojis now, which we need to add more. But thank you very much. I appreciate you guys. Wesley, member for 2 months, says, and patting him with those 5, man, appreciate it. Wesley says, smash the like button, guys. Pat, Oscar, Gator, original OG 702 crew loves the community, plus you, BCB, for bringing us all together. Yeah, I'm just the guy hosting. It's all you guys doing your own thing. Nobody loves me. Okay, jury, no rip. Jim Cramer calls for a higher stock market. Yeah, well, what we might be seeing is like a longer play, is my thought about it. I saw that too over there on Twitter with Jim Cramer saying the Fed is doing such a good job. Let me go see if we can read what his quote was to scare the crud out of everybody. Jim Cramer, what you got? Powell is winning in so many places, from homes to job openings to starting salaries. That's one of the reasons this market can go higher so easily. Good job, Kramer. Yeah, so I think, what we're probably going to have to see is we have to see, like I talked about with all the Google Trends stuff, right? You see all of the waning search volume for recession, but you don't see like increases in search volume for like bullish search terms of like what stocks to buy, should I invest? Those search terms are not picking up any steam. And usually we don't see that stuff until new all-time highs hit, right? Because that's when it makes the airwaves. That's when all the news goes wild, bull market on, we hit the new all-time highs. And the general public has to believe that the Fed is going to pull this off, that there is going to be a soft landing, there's going to be no landing, it's all going to be phenomenal, we're going to rock and roll. So it might not be something that happens overnight, but something that kind of takes a little bit of time. Either way, we like we just showed for the last 15 years, The marker has consistently been the lower lows for the stock market. As long as we're not doing it, I don't see a reason to panic just yet. But there will be a day. There will be a day. Code 9. But thank you, Jory. Code 9, gifts 5. Man, you guys are wild. We just hit 100, you guys. Thank you. Code 9. Appreciate it with a $5. Jory, 2x leverage short on DXY NDX at 4.236. Is it risky? First of all, I'm never going to ever tell you to do any type of leverage because you can go to zero, right? It's just never something I'm never going to tell you to do. So that's completely your call on what you're planning on doing there. As long as you have a stop loss in place where you say things aren't working anymore and you're not waiting for BCB to say, hey, that went higher than the 4.236. You're going to use leverage. You better know dang well what you're doing. As for me and my thoughts on how I'm going to play, if I'm going to do any type of like inverse ETFs or anything like that, I'll probably, for me, like usual, take my stabs at the 4.236. But you can look at things like the S&P. Go look at the S&P. It is poked above the 4.236. Even this right here would go above the 4.236. So this would exceed beyond it. So I wouldn't be too convinced that it's going to go completely stop with it on pinpoint. But the thing that you do see over and over, like we just shown, when these parabolas get put into place, every single time it sets a new low on the daily time frame, that's been the mark of the end. So that's a pretty clear like rule, right? Like if a new low gets put into place, there's the time to start really panicking. Where would things suddenly change and not consistently match how they would behave? If it set a new high after that, then you'd be like, wait a minute, that's not playing out right. And that's what traders are doing. Traders are not sitting here thinking they're going to be 100% correct. Anybody who here thinks they're a trader has the least bit expectation that they're going to be 100% right. You're living in gambler's world. That's not how it works. They have the expectation they could be 50-50. And that's just the reality. The thing that's within their control is how much do they manage the risk and the limit risk on it. You know, what's their risk to reward ratio? And if they repeat the same thing over and over and over again, if they roll the dice 100 times and they win, or if they flip a coin 100 times and they're right, every time they're right, they win 2, but every time they're wrong, they lose 1, well, then they're profitable. And that's how they operate. They do not operate under the false reality that they're going to flip a coin 100 times and it's going to land on heads 100 times. It's not it. The thing within their control is to manage the 2s and the 1s. Make the wins be 2s, make the L's be 1s. But to just do it at the 4.236 extension might be crazy. Not to say I'm not going to do it, but be making a lot of adjustments at that time. But like confirmation would be the lower low. And, you know, if this thing is going to crash and crumble, you know, you have to get the peak. See, the thing I don't like about a lot of like moving average stuff, right? People are like, you know, yeah, I do moving average. If it breaks this moving average and then blah, blah, blah. So like the meat of the move is they get here, right? So they sell here, then they buy back in on the breakout. The only thing they caught is this little tiny portion of it right in here. For me, I speculate very hard on where the reversals are at. So on my channel, you know, you're always seeing me look for reversals, for bottoms, for tops, peaks, right? The peak of the market, the bottom of the market. And not so much about this part, but how can I catch the most meat of the move? That's why I study things like crashing structures, tops, 4.236 extensions, and things, right? So in this circumstance, you wouldn't necessarily have to wait until way down here for that. But, you know, there would be your confirmation according to how these things have played out. And then the invalidation of it would be the break of the new high, because it shouldn't do that, right? So that's the way I would think about that. Eric again with 5, my brother. Thank you very much, man. I appreciate it as always. Crypto brother member for 3 months. Hi, could you check YFI USDT Yearn Finance on the Binance chart, please? I know you said you're not familiar with YFI, but I'm curious. Thank you. I know it's popular, right? Looks like every other chart in crypto. You'd hope you're in spring. Yeah, but I don't see anything about this particular chart that sets it apart from anything else in crypto. Except that, you know, you would potentially be right here at the very, very final phase of Wyckoff, right? Selling climax, automatic rally, secondary test in phase B, spring, rah. But thank you, Crypto Brother. Hope that answered, man. Pat, thank you, my man. Eric, again, and Pat, again. You guys, thank you. That must have been the attempt to get to 100. Jari, if the US 10-year 3-month US2 gets above 0% Doomtown. So I've played with that. Here's the problem with it. You can answer your own question. Go study those. Go overlay the Dow on top of it, right? Do stuff like all right, so this is inverted yield curves, right? As a 3-year. Whoops. 3-month. What am I doing wrong here? What am I doing wrong? We'll get rid of this. Rid of that. Rid of that. All right. What am I doing? I feel like a dingus. How do I invert a yield curve? Okay, whatever. I don't know why my brain is farting here. So I've spent a lot of time on this the past week. You will find it very hard pressed to say, this is the moment where it actually does it. I know everybody argues that, but even, like, I need to have a discussion with TXMC because I've found, I know that's a theory that a lot of people have, the inverted yield curve, and then when it crosses back above 0, right, when it uninverts, that's been when things have historically fallen apart. That's the argument that there is, right? I've gone through it to say, how would you ever find that particular moment in time? Like, it happens 6 months later, right? I've seen the inverted yield curves flip back, and then it can go way up for quite some time before something happens, or something just minimal ends up happening. So if you're using that strategy, you better have, like, thank you. Yeah, that's what I did, right? All right, I'm just gonna copy what you have. Yeah, why am I getting the same thing? Okay, are we looking better now? There we go. All right, so place it at 0. Let me move this. Put it over here. Coordinates. And we'll add the DJI. Boom. Okay. All right, so the inversion happens here, right? But the market shoots up higher, right? So the inversion happens here, but the market shoots up higher. The inversion happens here and it goes lower. Why don't I have more data on this? There is more data on this to go back further to show the inversion, and nothing happened here. The market kept rampaging. When this inversion happened right here, let's try 2-month. Wait, 2-month. What am I doing? Okay, whatever. In addition, one thing that's different in here is look how deep this is. Would it happen way before the inversion, before it uninverts itself? I mean, this is wild. Could it happen way before then? Will it have to go all the way back up? The $1 million question. But I guess you can say, right, given enough time, it does. But you could see how much it had flipped here. Look how high it had inverted here, or uninverted itself. From 0 all the way to 2.4, and then it still set another new all-time high afterwards. So long-term trajectory, maybe, likely, I guess. Let's see, what's the federal funds rate during that time? Okay, there you go. So what is happening? Why are the yields reverting back? And it's because the Fed has started a cutting cycle. Right? You could see it right here. Look at this. Once it starts going, why is it going? It's because the Fed has started cutting. Right? Starts reversing, goes back above 0. What's happening? Fed's starting to cut. What's happening? It starts reversing. Why is it reversing? Fed has already started its cutting cycle. So, like we have said a million times on here, which the general public has just been so misguided about, is thinking that cutting is good. Look what happens with cutting. Cutting. Right? US 10/3 shoots back up. What happens? Markets fall. So I think it all just points back to pausing is okay. Like we've talked about, pausing is okay for the Fed. It's when the cuts start. And so the cuts have been the cause. So anybody looking to, hey, we need to pay attention to the US 10-year minus the US 3-month, which I know a lot of people out there do. No, you don't. Just watch the Fed. Right? If the Fed starts cutting, that's what's caused them to shoot back. So that'll be the thing to watch for. I think that's a pretty solid answer there. The answer has always been when the Fed is cutting, that's the doom time. It has been for the last 20-something years. If the Fed is starting to cut, it's because there's problems in the market, and those problems cause that inverted yield curve to go back. So. Jory, thank you very much. Jaxer, shout out to the lurkers. Say hi. You might be green. There you go. Well, I think the only people who are going to be green are the people who are actually talking in chat. You talk in chat, you get noticed, and then that's when the homies hook you up. Thank you, Jaxer. Shravan, no frog. You don't want the frog, Shravan. Come on. Not on a Wednesday, man. We can't have that energy here. Connor Doyle, new member. Welcome, Connor. I feel like you've been a member before, Connor. Have you really just been hanging out, not being a member? Anthony D says, what triggers reverse repo to release liquidity back into the markets? Is there a way to predict when it will happen? That's beyond my interpretation of it. You'd have to ask other experts on that. The thing that we saw happening in here was just how it had stayed here during the whole hiking cycle, right? So of all the reading I've done and all the research I've done on the reverse repo, and to understand why money gets parked over there at the reverse repo, is like, let's pretend the federal funds rate is 5. We're just going to use these numbers. We're going to say it's 5%. You can go buy a 1-year treasury or a 10-year treasury for 5.25%. Obviously you can't, but just pretend. Which is not, right? What is it? Let's use the real number. What is the 10-year treasury? 4.09%. The Fed opens up this facility and they want to pull liquidity out of the market. They want to calm markets down and pull liquidity out. So they're going to offer like the federal funds rate for overnight lending. So institutions can go lend their money to the Fed overnight, and they'll get that rate of about 5%. It's a little bit more than that. It's typically going to be about 0.25% below what the 1-year Treasury is going to be. So what is the 1 year? It's 5.4. So they're probably getting about 5.15%, which is close to what the federal funds rate is right now, right? It's like 5.25%, right? So what you saw happen is you saw a lot of banks buy a lot of long duration treasuries, and they're all locked in at like 1%. And what has happened is that on the open market, they can't liquidate those without taking a loss. So they're not going to make money on any of those treasuries that they have. So rather than locking themselves into long duration treasuries, they can go park their money at the Fed and get this 5% interest rate over here. So why would the money come out, right? So that could be theoretical. And here's my thought process on it. If they're worried that the Fed is going to continue raising rates, they don't want to get locked into the treasuries. But if they feel that the Fed is going to stop raising rates or start cutting rates, then they want to go grab those treasuries while those rates are still high. Because now the Fed is done with the tightening cycle. Like you can look at the forecast. Let's see if it shows us on here. I think it's in here. Here. The market prices it that by December of next year, they will have cut a point off. So it'll be from 5.25. They anticipate will be cutting by next year. Now, this thing has been all over the place, but look at the next 6 months. They're anticipating that it's not going to move for the next 6 months right now, and that will eventually start cutting. So if the market believes that these are not going to continue going higher, and that there's the potential that the rates will be cut, then they can go grab those treasuries right now and lock them in and leave here. And then other money moves further out the risk curve. So being able to predict it, I think that comes a lot with what the expectations of what the Fed is going to do, it appears, right? If that money is leaving, right? And so the Fed's pretty much hit. I think, what did they say earlier? They originally said in 2023 they were going to do 75 basis points of rate hikes total. After they did the 75, they paused. Then they did a 0.25% rate hike, and then they said they would probably do 50 basis points before the year is over. So right now, I don't think the market's even pricing in that other 25 that is still remaining in there. So they still said they would do 25 basis points more throughout the rest of this year. But like when I think of my thoughts, right, what I'm looking at in the markets, I'm going to be grabbing treasuries, right? I mean, I'm going to be grabbing them. Sure, I'll be trying to, make my best guess on where to put some money to profit off of a fall happening in the markets, but also realizing that, if this thing is going to go on for as long as I think it is, right? If I think it's going to go to the 4.236 extension and then start falling, we got some rates, man. They're going to have to be cutting to try to save something like this from happening. So we may be at a point where it's kind of like the last opportunity to grab them at these higher rates. So that money's flooding out if it's feeling less confident in the Fed continuing to be able to raise rates. Because this is the fear. Oh no, they're doing 75 basis point rate hikes. Well, I'm not going to go grab a 1 year or a 10 year or a 5 year. I can just keep parking it in here and my rate will rise as the Fed continues rising. But then the Fed starts to slow down, paused, slow down, and they're not confident that they're going to be able to continue, right? So we had 4 meetings in a row where they did 75 basis points, then they did it 50 afterwards, right? Now throughout the whole year, we're August right now, they've done a total of 1 percentage point throughout the whole year compared to last year where they did over 4. So the market doesn't think they have much more room to be able to go up. So there you go. So I think that the short answer, Anthony, is the lack of faith in the Fed being able to maintain current rates or continue to rise them and wanting to go lock in these rates for a longer duration because they're getting close to their peak. Zoltan, gifted 1 BCB membership. Thank you very much, Zoltan. XRP bullish. No message, man. Just a generous super chat. I appreciate it, man. Zach Hype. Message deleted by Oscar Hernandez. $2 super chat. We'll see how that goes. Joe Trent. Wanted to get the first one out of the way and say thank you. I've listened to every video since 2020. Thanks for all you do for us. Thank you for the generosity, Joe, first timer, and thanks for saying what's up, man. For every video since 2020, amazing, man. Is anybody here in the chat going to go to New York City in September 29th? Anybody planning on going? David Kuro says, do you ever buy junk silver? If yes, where do you look for it? Thank you for everything you do for us. One, yes, I absolutely do buy junk silver. I love it. It's probably my favorite silver. So I've bought it from a lot of places. I've bought it, from online retailers. I bought it off eBay. My favorite place to buy it is to buy it at a coin shop, because you can buy an American Silver Eagle from anywhere. It's not a problem. You can just buy a new Silver Eagle anywhere, and it's all going to come looking the same. But if you end up buying junk silver, it can come in all varieties of conditions. I'm not a huge fan of my junk silver looking really crummy. So if you don't know what junk silver is, everybody, it's 90% constitutional silver. So pre-1965 United States currencies of dimes, quarters, and half dollars. So I like to buy it in person so I can physically look at it first. Looks like we're starting to see a little bit of a turnaround over here in the stock market. Now negative over here on the Dow after the big rise up. One thing I have been keeping my eyes on is to look for a double bottom. So keep that in mind. But otherwise, it's still fine. Let me show you that again real quick. We talked about this yesterday. The nice thing is silver has produced no such signs of a double bottom, right? It just went straight up. So we'll see. I like to do it, but you can always, like that website that I always go to, findbullionprices.com, and you can compare. Currently, the rate is about $20 face right now. So for every dollar's worth, if you buy 4 quarters, it's about $20. It's a little steep for me, but I don't know if it's going to get any better than that. But it's kind of out of my price range right now. But unfortunately, I've got a lot of it. If you guys know, I even had a coin roll hunting channel. I've got a lot of it. I've got a lot of junk silver, a lot of dimes and quarters and all kinds of stuff. Peace dollars, Morgans, Walking Liberties, Franklins, Mercury dimes, Barbers, all that stuff. Shravan says, no, I meant I didn't see a frog on Wednesday, so I'm asking to play the frog. I got you, man. I got you. Yeah, we've done the frog a couple of times already. We'll get it once before we head out of here. Heather Colander, hey BCB, what do you think of the 5.3 theory? It is actually predicted all prior Bitcoin tops and predicts 79K this cycle, then no new high for many years, if ever. Please look into it sometimes. So I understand 5.3, essentially the drawdowns, right? 5.3 times the rise of whatever, was it? Percentage rise of the last one, right? Off the bottom. All right, let's go look at Bitcoin. Yeah, this is acting funny with this stuff on here. There we go. One reason I don't like it as well, let me say this, I don't like it. It says that this is a bull run and that this is a bull run. Like I've already stated, I don't believe that. I believe that this took 6 years to play out, and was nothing more than another super cycle, the third one that Bitcoin has done. So I'm not in that camp. Right, that this was the third super cycle that we had that happened in here. But I believe the idea of it is, right, you go up. Let's get it right. 12.5 thousand. And you go up 2,000. So 12,560 divided by 2080 comes out to 6.03. This is what we're talking about, right? So anyway, divide that by 5. Looking for a 416% rise off of the low. It gets you to 79, like he said, right? 79,000. That would be far different behavior of what we've done so far. I'm just not in the camp of it. What you'll find is that the percentages of each of these moves, I believe they're the same. They're very, very close. And so each super cycle representing, right? This one did come up a little short, right? But anyway, 44,000, 53,000. That's the whole super cycle. And it's the same size as the last one, too. The one that was prior to this one, right? So I don't know. Good luck. Maybe it'll be right. I don't think it will be. I think, the best case scenario, really the best thing I can hope for, still to this day, the best thing I can hope for is a 702 Fibonacci retracement. If it breaks into new all-time highs, it'll be super mind-blowing to me. It'll blow my mind for sure. And technically speaking, as I presented in yesterday's video, these guys, anyone who adopts this ideology, is not invalidated yet, right? My thoughts for invalidation will be with the stock market happening. So up to you, man. I'm not in the camp though. Really, all it is super cycles and people trying to make sense of different phases of the super cycle and dividing it by 5.3. And I bet if somebody laid out the rules and if I got really close on their math, I bet their math is wrong. It's close, but not quite. And doesn't it also, the 5.3 theory also indicates that you would have smaller corrections as well? And so everybody who's hoping for 12K, they're just going based off of what 2014 and 2018 were, right? They were 86, 84%. So they wanted the same thing, right? 82% or whatever it is, to match the previous lows. But you're way past it on time. Way past it. You're way past it on indicators. You're way past it on everything for that to happen. If you did that now, it's just doom, 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 doom down. All right, Oscar Hernandez, pew, pew, the everybody. Thank you, Oscar. Pat gifted one. I got you, man. Pat, it's good to see you coming through, man. I don't know if you're on a PC or what you're doing, man. It is working, though. Eric as well. I appreciate it. Eric, losing ground. Look at the month chart on the DXY. Looks like lower lows and lower highs overall, downtrend. Right, so we've spent a tremendous amount of time on the DXY. Unquestionably reversed, but the thing is understanding this rate 1, 2, 3, 4, 1, 2, 3, 4, 5, back up, crash, right? So you have the potential for crashing. So if you go take out this low again, right here, all bets off, man. This thing could be in absolute goblin town mode. But so far, it's acting like a support has come in here. It has acted like it, right? Our eyes are always going to see downtrend, but it's always going to see that straight into a reversal. You're not going to see uptrend till you get there. That's just the way our eyes work. It won't notice it till here. Right here, it'll still be kind of questionable that it could break. It's not until it gets right here that your eyes say, oh, wait, but look how far you've already traveled by then. So having to try to identify things that are happening in here way ahead of time. As of right now, lower lows, lower highs, right? Still downtrend intact. But this is a location where a technical bounce is very probable. So keeping that in mind. New member, Adrian. Hey BCB, have you ever smelted silver? No, I've been curious to do it, and I've gone through the processes of like adding thing to my Amazon cart to do it. But then I think to myself, man, am I really gonna like do this often? All that's gonna happen is I'm gonna get burned. I'm gonna say, forget this. But I watch YouTube videos of it. It's fun. It's a nice go to sleep thing to watch. But all right, guys, there we have it. You got the markets up slightly here. You got the stock market up slightly off a massive day yesterday. You got Bitcoin still sitting at 27,300 after the big day yesterday. XRP still just chugging along. I still think there's still more left to this. Hopefully this thing, though, can wrap itself all up before the big party up there in New York City. So there's something to celebrate outside of just, of course, regulatory clarity and being the only asset that's not a security in the entire cryptocurrency market. That is worth celebrating in general. Of course, we could all use a little bit of price relief to happen at the same time. You got gold moving up today. You got the dollar moving down today. You got Coinbase moving up even more today. So Coinbase is doing all right today. Silver knocked on $25 door, now struggling a little bit right here, but still sitting above yesterday's prices. Otherwise, guys, pretty okay day off of some excitement that happened yesterday in the markets. But on that note, guys, thank you all so much for the support. Thank you all for being in here. Thank you for the likes. We hit 1,000 likes on a Wednesday. You guys came strong on the memberships and the support, guys. I sincerely appreciate it. Andy, man, again, geez, thanks, man. 5. I appreciate all of you. I hope that you're having an absolutely fantastic week so far. The markets have been friendly this week, guys. So if you haven't like let that sink in, sigh of relief. Stock market's given a nice little bounce there. And crypto's holding steady in here after everybody was screaming for 12K for the past week. Goes the opposite way, as is typically the case. But all right. What are we doing? We're doing super fast. I know that's what the polls had said that they prefer. Even though I know Oscar wants the screwed up and chopped version, but here we go.
It is Wednesday, my It is Wednesday. Dudes.
And then just for you, Oscar, before we leave, because I love you.
It is Wednesday, my dudes. It is Wednesday, my dudes. It is Wednesday, my It is Wednesday.
Happy Wednesday, everybody. Halfway through the week. I'll check in with you guys again soon. I want to thank you all so much for watching. If you could, please like this live stream and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you can be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one, guys.